Here is a question worth sitting with. When was the last time the European Union collectively described another major power as a critical long-term strategic challenge? Well, that moment arrived this week, and the power in question is China. EU foreign ministers, meeting on Thursday the 16th of July, 2026, formally adopted language describing Beijing as precisely that, a critical long-term strategic challenge. This is not diplomatic small talk. This is the EU signaling, in the clearest terms it has used to date, that its relationship with China has fundamentally shifted. And today, on Friday the 17th of July, 2026, the ripples from that declaration are spreading across European capitals, trade floors, and foreign ministries worldwide. So let us break down exactly what is happening, why it matters, and what comes next. The language did not come out of nowhere. On Wednesday the 15th of July, reports emerged that the EU has accused China of actively seeking to reshape the global order, a pointed accusation to level at the world's second-largest economy and a permanent member of the United Nations Security Council. The EU's strategy paper represents the collective position of all 27 member states, and it goes considerably further than any previous EU document on China. Beyond economics, it addresses governance, technology, and influence operations. The document marks a decisive shift away from the cautious, trade-focused language Brussels has historically preferred. In essence, the EU is now arguing that China is not merely a trading partner or diplomatic interlocutor, it is an actor whose ambitions actively challenge the international system that has underpinned European security and prosperity since 1945. Perhaps the sharpest signal came from Brussels itself on Tuesday the 14th of July, when European officials warned publicly that dialogue with China will not suffice. That is a remarkable statement from a bloc that has, for years, argued that sustained engagement is the most effective tool for managing Beijing's behavior. The shift reflects a growing frustration across member states that years of summits, trade negotiations, and diplomatic conversations have produced little meaningful change in China's conduct, on issues ranging from market access restrictions to technology transfer and human rights. Senior EU officials are now indicating that Europe must pair diplomacy with robust instruments, trade measures, tighter investment screening, and closer coordination with partners including the United States, Japan, and Australia. The era of assuming that talking alone would bring Beijing in line with European expectations appears to be drawing firmly to a close. On this very day, Friday the 17th of July, 2026, a senior member of the European Parliament made headlines by arguing that sustained trade pressure could actually test Beijing's internal stability. The MEP stated bluntly that China's model is flawed, pointing to overcapacity in key industrial sectors, a prolonged property market downturn, and deepening demographic pressures as structural fault lines that could be exposed under coordinated external economic pressure. This is a significant departure from the conventional wisdom that China's sheer economic scale makes it essentially pressure-proof. It reflects a view gaining traction in European policy circles, that the EU and its allies may have considerably more leverage over Beijing than they have previously chosen to exercise. Whether or not one accepts that analysis in full, the fact that senior EU legislators are making such arguments publicly marks a notable and deliberate hardening of European tone. Beijing has not taken any of this quietly. Chinese government experts, cited in the Global Times this morning, dismissed the EU's strategic assessment as ideology-driven, arguing that it reveals geopolitical anxiety rather than any measured evaluation of reality. From China's perspective, the EU's posture is shaped less by genuine strategic concerns and more by American pressure to align with a broader containment strategy against Beijing. Chinese officials have also pointed to what they see as European contradictions. The EU continues to run a substantial trade deficit with China and relies on Chinese supply chains for critical goods, including electric vehicle components, solar panels, and rare earth materials. Beijing's message to Brussels is pointed: the EU needs China as much as China needs the EU, and inflammatory strategic language, in Beijing's view, serves nobody's commercial or diplomatic interests. Adding further pressure to an already fraught week, China on Tuesday the 14th of July urged European nations to stop supporting what it called an illegal ruling on the South China Sea, a reference to the 2016 Permanent Court of Arbitration decision that ruled against China's expansive territorial claims in the region. Beijing warned that continued European backing for this ruling risks seriously harming bilateral ties. This is not a remote regional dispute. The South China Sea is a global shipping artery through which an estimated $3.4 trillion worth of trade passes annually. European commercial vessels depend on those lanes, and any escalation in the region carries direct consequences for European supply chains. China's warning to Europe is, in effect, a test of how far Brussels is genuinely willing to push its newly hardened strategic posture when real economic costs are attached. So what does all of this mean in practical terms for European companies and ordinary consumers? The EU's hardening stance introduces a new layer of uncertainty for businesses with significant exposure to the Chinese market. European carmakers, luxury goods producers, and chemical firms, all of which count China among their largest markets, are watching developments closely. The prospect of Chinese retaliation against EU restrictions on subsidized Chinese exports is already weighing on investor sentiment. Meanwhile, the European Commission's investment screening mechanisms are becoming more stringent, with Chinese acquisition attempts facing closer regulatory scrutiny. For consumers, any escalation in trade tensions risks pushing up the cost of goods that depend on Chinese components, from consumer electronics to household appliances, at a moment when European households are still managing the tail end of persistent inflation pressures. So where does this go from here? The EU's formal designation of China as a critical long-term strategic challenge is not merely rhetoric, it provides the political framework for a series of concrete measures expected in the months ahead, including tighter export controls on dual-use technologies, expanded investment screening, and deeper coordination with NATO allies on economic security. European diplomats are careful to stress that the goal is not full decoupling. The EU remains one of China's most significant trading partners, but what they term de-risking, reducing dependency on Chinese supply chains in sensitive sectors whilst maintaining the broader commercial relationship. Whether Beijing views that distinction as meaningful remains to be seen. What is clear is that EU-China relations have entered a new and more contested phase, and the decisions made in Brussels and Beijing over the next 12 to 18 months will shape the geopolitical landscape well into the 2030s. The bottom line from this week's developments is straightforward: Europe has crossed a threshold in how it publicly frames its relationship with China. The language of critical long-term strategic challenge carries genuine political weight. It justifies policy measures, signals intent to allies, and sets expectations on both sides. For those following this story, the key question is whether EU rhetoric will now translate into coordinated, sustained action, or whether economic self-interest will ultimately moderate Brussels' tone. The EU's own history suggests that ambitious declarations do not always survive contact with trade reality. But the mood across European capitals this week feels genuinely different, more unified, more urgent, and more willing to accept short-term economic discomfort in pursuit of long-term strategic resilience. Stay with us as we continue to track how this pivotal relationship evolves in the weeks ahead.